Today's Friday, September 9th. It's the last trading day before 9/11. They had a moment of silence on the exchange this morning. Let's take a look at the S&P 500. I've been talking about the narrow Bollinger Bands for a while, and you can see in this chart that they're quite narrow, and bandwidth indicator very narrow, narrow as it's been in a long time. But here's the twist. This chart is not the current chart. This chart is from 1995. This is Labor Day 1995 holiday up in here, and the line here is the current level of bandwidth today, 2016. You can see a dip below that level in 1995. This is the lowest level I've found since 1982. My data really stops earlier than that. So during the entire secular bull market, right now is the second narrowest Bollinger bandwidth that we've had on the S&P 500, with the narrowest being this one here in 1995. So what was happening in 1995? Well, this is 1995 to 1987. You got 8 years into a bull market from the low, kind of similar to where we are now. 8 years since the 2008 low. All right, look at the 200-day moving average, well below the prices back then in 95, and the 50-day average is up in here. It's kind of hard to see with the Bollinger Bands, but the market came down as close to the 50-day average. All right, so that's where we were in 1995. Chart looks very similar to today. Let's jump to today, and there we have it. It's kind of similar. The trend isn't nearly as smooth as it was from this earlier low. In 1995, you had a low a couple months earlier than this one here in 2016. But anyway, we have very low, very tight Bollinger Bands. There they are again. The bandwidth indicator very low down here. There's the 50-day average. Market coming to touch that. The difference between now and then I see is that the 200-day average is flat, which means that overall the market's been sideways for quite a long time, whereas in 1995 it was clearly in a strong bull market. Now in 1995, the Bollinger Bands resolved to the upside, and from 95 to 99, you had the late 90s, the tech bubble, the whole deal. Very strong bull market after that. If you only go by that one precedent, you would expect another couple of years of super bull market from here. But again, you can't use one instance as a precedent to say it's going to happen again. So the differences between now and then I see is that back then it was a roaring bull market for years. Here we're in a flat market for a couple of years based on the 200-day moving average. So there you have it. There's your analog of the week or of the month. And let's see, we still got to wait for the market to break out one way or the other from these Bollinger Bands.